Good afternoon, everyone. Welcome to the Sunday Big Tech Breakdown Show, where I break down techno analysis for you guys on Nvidia, Tesla, Microsoft, Google, Apple, Amazon, and a couple of things I'm seeing in the market. So I would do a support and resistance guide for you guys, and a couple of levels for you guys to see where it's a good spot to trade your stocks. All right. So before we get into that, let's take a look at earnings for next week. The only one I'm looking at that's going to be more significant is Broadcom, which is AVGO. Is also hitting all-time highs as a semi stock, like Nvidia is as well. And the rate hike is priced in now for June 14th. We are going to have likely a 25 basis point hike. It's now 64%. And for Nvidia, I'm seeing currently dark pool short volume that's the highest it's ever been, which makes sense. It's the price is currently at the highest it's ever been as well, and the volume traded on Thursday due to its earnings report is also all-time high. So this short volume is pretty normal, but not normal at the same time, if that makes sense. So let's take a look at Nvidia. You can see that Thursday volume right here, how high that volume is. If you just take half of those volume for short volumes, then obviously we have a all-time high short volume as well. So where would the next level be for Nvidia? If you ask me, likely that $1 trillion mark is going to be a psychological level. So we are currently around 963 billion market cap. So that's roughly 40 billion away. So that's roughly 4%. 4% move will roughly give us to roughly this 405 range. So if we do, let's say we don't consolidate sideways here enough, we shot up. There's a potential we hit 405, and then it'll just create and sell off. It'll create a doji bar there. But because due to how much we have ran just from 2 days, except more like one day, 31% from the earnings. So what the bulls want to see is we go sideways and consolidate through time and cool things off, and then make their next move. That would be the most ideal for bulls. And what the bears want to see is obviously breaking this pivot low. So breaking this low will start to fill the gap between this gap and that gap. What the bears want to see, and let's take a look at the fib retracement. So right now we have retraced not even 0.382, so it's still a bull flag. As long as we hold within this 0.382 level, and let's say we just chop down, consolidate, like this, then that's a potential bull flag if we do end up breaking above this prior 400 high. So 400 is obviously going to be the very first resistance that we need to break before we even test that $1 trillion market cap range. That's since there's no price action in history that is above here, we can't really, we don't have a lot of resistance to look at. So it's mostly supports. So if we do break down, I'm looking at this 346 level, which is the last all-time high level that we can finish bounce off of. So it'll be like bouncing off this level. We'll see how if the bulls can actually hold this the sideways range for on Tuesday. And the debt ceiling is passed, but they still need to vote on it. So we'll see if they actually finish voting on it and all that stuff gets done before market opens on Tuesday or not. So we'll see about that. All right, let's get into Tesla. Tesla, this wedge, we have been looking at this wedge for a couple months now. You can see this is resistance, 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 and exactly resistance again on Friday. We got rejected from that level, and this is support, support, and support. So I'll continue to be looking at this wedge, this teal-looking line wedge, due to still being tested as well and bouncing off perfectly. That'll be my guide. And if we look within the wedge, this is the level I want to see it hold. If 106 for the bulls. So if we do come down here, I want to see us bounce off of it and retest this wedge again for the bulls. And if we do break out, I'm looking at this level and this level for once we break out of this wedge. You see all this 10, this 200 level where it's like act as resistance, resistance, and resistance, resistance. Used to act as support when we're above it. Now we're under it for the price. It will act as resistance. You can see we're pretty close over there too. And if we do break that 200, we're looking at 210. For the bears, obviously you want to see it break 106 level. to go down to this prior support that we have been holding a support for a while. And so we do come down here. If we do break that, I'm looking at the bottom of this wedge. Potentially may bounce off again one more time and tighten up into June, end of June, and then to see if it wants to break whichever way it wants to break. It doesn't have to go to the end of the pattern. Never have to go to the end of the pattern to decide to break out or not. But when it gets closer and closer, then we know volume and volatility will come in once it breaks out. So, for example, we break out here, they're going to be likely increasing in volume as well when that happens. So we watch for that as well. As well as the downside, if it breaks to the downside, then it will also increase in volume. Let's move into Microsoft. So Microsoft has been one of the best stocks in the market in terms of mega caps that you always want to accumulate. It's a great company, but it's running due to AI as well, Nvidia. So it's running sympathy play to Nvidia at the moment. And you can see it's after this 2-day pullback. This was Nvidia's earning Thursday. Their earning was Wednesday, but the next day, this is when it popped in the after hours for Wednesday. And you can see all these move up for the 2 days, as well as Google. We'll take a look at Google after this. So where's the next level I'm looking at? It's a bit overextended, like all the other stocks. The same thing as Nvidia is overbought for the RSI indicator on a weekly, daily, 4-hour, 1 hour. It's pretty much every time frame is overbought, but overbought can stay overbought regardless of what stock you're in, due to market can stay irrational as longer than you can stay solvent. So we want to make sure to look at price action and not get too emotional on all the things. So you just want to short because we're overbought while there's zero signs of bears at the moment for most of this, all of these tech names, right? So the next level I'm looking at is this red looking line right here, which is the most volume traded in this cluster. So essentially what this volume profile is we line up the volumes for this little area and it'll show you where the most volume is traded. So the red line is where the most volume is traded. You can see that bar there. So that means we're under that, meaning when we come up to it, it will act as a resistance. And in the blue line, it's just the ranges of where the most volume is traded within that range, and where it starts and where it ends, kind of thing. So we are pretty close to that 335 level. So if we do, let's say we gap up Monday due to the debt ceiling being passed, all that stuff, and we gap up, right? We hit that level right away. And there's a potential that we pull back right away if we do gap up on Monday. If we don't, then potentially we grind up slowly, then test there, and then pull back. We do need a little bit of consolidation, just like this little drop here. So essentially consolidation, just wave up, wave down, wave up, wave down, wave up, wave down, wave up. Now likely need a little bit of a wave down, if we want to go sideways a bit before the bulls want to try to test this level. We do break that, likely looking back to this level, which is very close by. Then we're looking to all-time highs. If market continues, Microsoft is definitely going to hit all-time highs first before QQQ does, for sure, due to how much stronger it is compared to the NASDAQ and QQQ. And if we do drop, I am looking down at this level as support for 322. It also coincides with the lower range of this volume, and as well as used to act as support. So we'll see. And resistance back here, right? Prior resistance now is going to act as support. So if we do pull back here, still a very healthy chart. We can let the moving averages catch up, and while it cools off, goes sideways, that'll be the most ideal for the bulls. Bears obviously want to break back into these levels and come back into this cluster of range to retest that. So look something like up and then break down here. That would be a very notable win for the bears if we do come back to this 306 level. As for now, no signs of that yet. Even if we zoom into the smaller time frames, you can see every time frame is bullish for the trend. So we don't want to just short because it's overbought and potentially get caught out on the next move up. If you do, you can set a stop loss very tight and just potentially get stop loss for a small stop if you really, really, really want to short. But it's up to you to do that. So make sure to manage your risk. Google. Google is a little bit weaker than Microsoft, but it's still quite strong. Past couple of days, you can see after we broke out of this tight consolidation, we have been running quite a bit as well, 20% decent. So it was also running off of Nvidia's AI hype due to it being also have AI components in its company. Well, it was a little bit weaker on Thursday. You can see it was red. It was green, but it didn't go as up much as Microsoft did. Microsoft broke its prior high resistance here. You can see Microsoft breaking its prior high over here, while Google didn't and retested only. So this would be my key resistance still, the same 205 level, and we'll see if we can actually get over that. So we pretty much a double top with Thursday and Friday. So if we get over that, then we're looking to these two now. And for support, it's obviously this level. It's pretty much a sideways. I would call this a consolidation. So we do break that sideways, then we're looking down to these two zones right here. You can see back here, that's the most traded zone. You can see this zone, top of this zone is all this levels that we're rejecting from here. So we bears would like to see us come down and test this level. And if we bounce, then there's a potential that it can form a daily downtrend due to the size of a drop. So let's say we drop here to here, then the next bounce, there's a potential where there's enough room for us to scout a lower high. Which is a shallow drop to here, then chances of us dropping more would not be that likely. We can more likely continue upward due to it. Just like most of the tech stocks, every trend is in favor of the bulls at the moment, especially the longer time frames. So potentially a shallow drop means it's just a consolidation for the next move up. So if we do break that, we'll likely come into this cluster range. You can see the bottom of all this resistance over here is where we're currently testing. We haven't gone over it yet. So that's definitely the most key for me for Google to see if we can get back into this level. And if we do get back into the level, then we're looking back all the way up here. Turn around the bottom of this top range. You can see all this tested support, resistance, support. So we're pretty far from that. So the very first step for the bulls is to get over this and hold this zone. And the bears obviously want to come back into the zone to break this level. For you guys for Google, and let's take a look at Apple. Apple's just been choppy ever since its earnings. Although it's starting to join bulls again. Back here, it was this candle was the earning candle, and pretty much it just chopped around for a bit, back up, back down. Now for the last 3 days, it has been pretty decent as well. So we'll see if we can actually break back above this August high. If we do back above August high, then we're looking back above. Where's that? Let's see. We're looking back above this level and then all-time highs, pretty much. There's not a lot of resistance above after this level. You can see how shallow these volumes are traded. Top here, there's not much price action. So less volume that's traded on that in these ranges, the easier it is for it to move through it, both the upside and the downside. Yeah, see. So we'll very likely test them. I just deleted those levels by accident. But yeah, we'll likely test these levels. So that would take that would take us to 2%, 4%. Yeah, it's not even that much. But due to how much Apple has been running, just like every other stock, there's a potential that we also reject from this level. Although you can say it's been resting quite a bit, doing consolidation sideways, which is a good sign for the bulls. I mean, after its big run, it's taking a break. Now it's moving for its next move up. So there's a good chance if we do break this, then I'm looking to this 180 level for sure. Since you can look at Microsoft, it hasn't done its sideways. Actually, this was good for the bulls. You can see we had cooling off, going sideways, accumulation for the bulls, and for its next move, like Apple did over here. for its next move. Although this move was sold off, now we're back to testing that again. So see if we can break that level or not. Let's look at Amazon. Amazon has been a laggard tech for compared to every other of its peers. You can see we are still ways away from all-time highs, 55%, where Apple is 4% away from all-time highs. Microsoft, it's like another, I think it's about 4% as well. Let's see. Microsoft is 5% from all-time highs. So Amazon is lagging, but it's starting to join bulls as well. After we've broken out of this wedge pattern, where just checking my time, wedge pattern after just like that wedge we had saw on Tesla. So this is potentially what it would look like when we break out of it. Amazon broke out of it, came back, retested, backtested the resistance, now acting as support, which is a very good sign for the bulls. So bulls are buying up when it comes back to that level, and then the next move up. Also, very healthy consolidation right here. This is what the bulls want to see to form a base sideways for the next move up. So if Nvidia can do this, form sideways base for all of next week, or for 2 weeks or just some time, then there's potential that it's gonna next leg up. Once it breaks that sideways range, or it can break down from that sideways range, and that'll be a distribution zone. So if we do form a base, then you can potentially play off of that and see. You can either play short once we break the bottom of the range, or play bull once we break the top of the range for either side for Nvidia. But back to Amazon. So Amazon, looking back at this level where we rejected kind of on Thursday, we needed more price action up here and time to see was a true rejection from the 120s. You can see all these levels have been acting as resistance support, depending on if we're under it or lower it. Support over here, resistance over here, resistance over here, support over here. So if we do break that, I'm looking for Amazon to fill this gap. See this little gap here. So if we do come back into here, this zone, there's not a lot of volume traded here. So we're a good chance that we can fill this gap. Once we do fill that gap, then we are likely looking back to the top of this zone, because there's, see how empty it is, and then we're back under the all-time high cluster of that forever. That this is like the big boss, last final boss that you want to fight against. This thing consolidated for what, 2 years, and so that would be the bottom of the zone. So I would say we probably won't get up to the zone on our first test. So it'll be likely a initial rejection due to how much we have been traded across this for how long, 2 years, and the amount of volumes that's been traded. You can see we try to bounce off here, try to bounce off here, try to bounce off here, but once we came back under it, was it. So last boss there. This still quite a bit away from that, so it's not much to worry about it at the moment. Still 13% to that level. So the first level, if we do break here, is that gap fill for me. That's going to be key. In QQQ, I did a QQQ and spot breakdown already on Friday, and as well as all the market economic data and what I'm looking at going forward for the market as well on Friday. So make sure to check that video out. And did a natural gas video yesterday. So if you do trade, if you're commodity traders, check that out. And so I got you guys for all the big tech stocks, and we'll see if that ceiling gets passed or not. It may be a sell news event due to how much we have been running on the markets. So that could potentially be a sell news event if the ceiling gets passed. So we have to watch for that. And due to, so yeah, we have been running 10% for NASDAQ since May 23rd. Wait, that's not May 5th, sorry. So that's quite a bit. So we'll see. And feel free to comment if you got any questions below. And if you're in a bearish or bullish position in the market, or what's your perspective of the market as well, feel free to let me know. And have a good rest of your weekend. There's no trading tomorrow. So tomorrow maybe I'll just post something like a music that I listen to or something during trading, or other things I do. So I will let you guys know, and have a good rest of your weekend.